David, how have the UK equity markets been performing over the past 3 months?
Well, I think you've seen an increase in volatility, certainly over the last week or so, and that's really caused the equity market in the UK to be more mixed, really. And you've seen a fall in the FTSE All-Share of about 0.6% so far this quarter. And that's really been driven by geopolitical risks. You've seen Russia's involvement in the Ukraine, you've seen increased tensions in the Middle East, and you've also seen weak economic growth coming out of Europe. I think offsetting that somewhat is you've seen good economic growth coming through in the US. You saw a snapback in their Q2 GDP figures that have just been announced. And you've also seen the ECB, the European Central Bank, announce its new level of quantitative easing come out, which should hopefully support European growth in the sort of medium term, really.
So, Henderson High Income Trust, I'd like to know how it's been performing in this environment and whether there's been any significant changes to positions.
Well, the trust has performed broadly in line with its benchmark, and there hasn't really been any significant changes to portfolio positioning. I mean, in terms of new additions, we've added to Jupiter Fund Management, and Jupiter is a company that has a very strong brand within the UK retail space, but it is expanding both in terms of geographically and in terms of asset class, and I think this will produce a better business in the longer term, really. The company is debt-free at the moment. And they've just announced a new dividend policy where they're likely to increase the dividend payout to 50%, but also return any excess cash after investment to shareholders. So you should see that ordinary dividend also be supplemented by some special dividends. So the stock could be yielding close to sort of 6 to 7% in a couple of years to come, really.
David, finally, what's your outlook for markets over the next 3 months?
I think the next 3 months is fairly difficult to predict. I think markets will likely be mixed because you've got geopolitical risks that I've already spoken about. I think they're likely to continue to rumble on, really. But having said that, longer term, valuations of equity markets, specifically the UK, are still attractive, especially relative to bonds on a yield basis. Also, corporate balance sheets are still very robust, so I think the outlook for dividend and dividend growth are pretty good and strong, really.
David Smith, thank you.
Thank you.